Hello everyone, today we're going to talk about the big market sell-off in the cryptocurrency markets, the reason why it happened, and how did decentralized finance protocols held up during this market sell-off. Now, in the recent days, cryptocurrency prices dropped a lot. For instance, the Bitcoin price went down from almost 50,000 down to 30,000 and now is rebounding as we speak. Now, there was a lot of speculation why did this severe price drop occur? And a lot of people pointed out to two very important news that came out in the last few days, namely that Tesla announced that they're not going to accept Bitcoin anymore as a payment mechanism to purchase their products, and likewise Tesla is assessing their Bitcoin treasury holdings as they will move forward. Additionally, a news came out that China reaffirmed their ban on financial intermediaries offering crypto products to retail investors. Now, what we see as a market-making company is that the severe price drops were in fact actually driven by two things. The first one is something called auto-liquidations. Now, auto-liquidations happen when a broker or an exchange executes a forced sell order because the margin that the trader has to support this leverage trade is less than the loss he is experiencing at that particular moment. So for instance, if a trader has a position that is worth $100 and he supports that position with $1, when he experiences a loss greater than $1, a broker or an exchange automatically closes that position to protect the trader from further losses and to protect themselves from further losses. So it was these auto-liquidations that were a severe driver in the price drop in the last few days, and we had almost record amount of auto-liquidations in the whole crypto industry history so far. Now, the second reason why we had severe price drops in the recent days is because of a lot of centralized exchanges went offline when we had this big market activity as those auto-liquidations were happening. So very few centralized exchanges had a full uptime and were fully online as we experienced those severe price drops, and actually a lot of centralized exchanges were down, offline, and the traders were not able to trade, execute their buy and sell orders. Most of the decentralized finance protocols actually held up really well during those severe price drops. They experienced the biggest volumes ever, and unlike the severe price drops that we experienced last year in March when the pandemic started, on these particular occasions those decentralized finance protocols functioned really well. They were stable, secure, and they actually pointed and showed and demonstrated that the decentralized finance protocols have their place in the bright vision and future of finance going forward. So I thank everyone for watching this video. I hope you learned a bit why we experienced those severe price drops, and also a strong point that the decentralized finance protocols held really well during those severe price drops. Thanks you everyone, and until next time.